ESG investing, the great Wall Street money heist. What? Wall Street money heist, Josh? That can't happen. Yeah. Oh, man, this is awesome. I love this article. My man Lance Roberts, Real Investment Advice. You should check out. I'm not all that familiar with Lance. I've read a couple of his articles, but big fan first time. All right, ESG investing, the great Wall Street money heist. We're going to read a little bit of this because this is awesome. Then we'll go on some of the comments. I could not agree with this more. Wall Street is once again in the midst of a money heist from naive investors, this time in the form of woke activism called ESG. ESG refers to the environment, social, and governance. All right, that's the ESG investing. All right. Let's see. However, with the recent surge in, following the financial crisis, Following the financial crisis, ESG funds had roughly zero market share or total assets under management. Today, ESG labeled funds in the U.S. exceed $16 trillion. The question is, what are they paying for? In the late 1990s, there was significant movement by Wall Street to limit investing in sin stocks, gambling, firearms, tobacco. Just as it was then, investors initially jumped on board, but when returns failed to match the S&P 500, that fad died away. Now it's there. I remember that, man. I remember it's like, I don't want to invest in sin stocks, oil. I don't want to invest in firearms, tobacco. Yeah, look, I get it. 100% I get it. But it's funny how that has now changed to ESG. Same occurs today as investors who want to be woke are demanding products that make them feel good. However, there's many problems with ESG. There are currently no universal ESG rules, to analyze ESG risks. There's none. Nor are there any clear frameworks to police ESG labeled investment products. Kind of reminds me of organic, isn't it? Oh, the USDA. Anytime the USDA gets involved, it loses its bottom-up approach. That's all there is to it. So now it's a matter of just getting the seal of approval from the government as opposed to being really organic, which is why we're calling it regenerative, not sustainable anymore, beyond organic, regenerative, as opposed to sustainable and organic, because that's where the government, they seal authority, and then you're like, oh boy. For example, deforestation is a major driver of climate change. Because the world is now greener than it was 100 years ago. There are more trees today than 100 years ago. So is deforestation truly an issue? You would think it's being used as a filter to ensure companies and ESG-labeled funds are not turning a blind eye to deforestation. But you'd be wrong. Carbon Tracker, an industry think tank, found that 78% of mutual fund providers offering ESG investments, however, none specifically excluded deforestation risk. Let me give you a top 10 topic. Let me give you an example of the top 10 holdings of two ETFs. One is specifically in ESG. The other is the S&P 500 index. So I think we got Apple, American Express, BlackRock, Facebook, Alphabet, Home Depot, 3M, Microsoft, Nvidia, Tesla. This right here is the S&P 500, I can tell. Apple, Amazon, Berkshire Hathaway, Facebook, Google, Johnson & Johnson, JP Morgan, Microsoft. So the bottom three, number one, Facebook's in there, Alphabet. Isn't that funny? So precisely what are you paying for? We're going to come back to this because it's interesting, because there's a guy in here who comments on this. He's really upset. The problem with ESG funds is that inconsistencies and abuse are rife. BNP Paribas, the largest bank in the Eurozone, never wastes an opportunity to boast of its green credentials. It is also the world's top banker of offshore oil and gas. And has increased its fossil fuel investing lending since the Paris Agreement. Here's the same BNP on sustainable investing. Why sustainable investing? Quite simply, it's worth it. Yeah. Another example is recent ExxonMobil board seat challenged by engine number one with the blacking of BlackRock and several pension funds with close ties to BlackRock. And guess what? BlackRock backed this no-name cadre of woke activists such as Exxon, and even as Exxon persuasively argued that engine number one wasn't qualified to run an oil company. With BlackRock on the fund side, ExxonMobil eventually folded like a cheap suit. The New York Post makes an interesting point. Now with engine number one likely to occupy 3 seats on Exxon's board, it isn't too much of a stretch to see the company passing Fink's ESG screens for his ETFs with flying colors. We're going to go on the board. Now we're going to be on our ETF screen for ESG, and lo and behold, good for me. If you think investment managers are doing it for the good of the environment, think again. Investment managers and banks are taking advantage of our collective willingness to help fight climate change because the ESG space is, to put it mildly, a zoo. Epic greenwashing is everywhere. Out of 253 funds that switched to an ESG focus in 2020, 87% of them then rebranded by adding words such as sustainable or ESG or green or climate to their names. None changed their stock or bond holdings, according to Echo Business. Why would they change their name and their holdings? And why would they change their name but not their holdings? Yeah, you know why. Complete fraud, a joke, jargon so ridiculous were among the choice words of Social Capital founder, some guy who used to describe the growing ESG movement. These are useful statements. It's great marketing, but it's a lot of sizzle and no steak. With ESG all the rage, the demand drives product development. However, there's understanding why large asset managers have embraced this strategy so readily. Higher fees. All right, so let's go back to, interesting. BlackRock is in there. Interesting, is it not? All right, here's again. BlackRock iShares, 25 basis points. SP with Spider Trust, S&P 500 9. So what's that? 3 times the 300 more percent expensive than the S&P 500. With what? American Express? Isn't that interesting? But BlackRock is in there. BlackRock iShares, a number 3 holding in BlackRock's ETF for ESG with 25 basis points. This BlackRock owns stock. Yes, you too can own an ESG fund that's almost 3 times as expensive as the S&P 500, all for the sake of feeling good about yourself. Look again at the table above. Furthermore, there are virtually no significant differences to the ESG ETF except that BlackRock put their company stock in the lineup. But of course, there's no self-serving purpose in doing that except that as billions pour into the ETF, it boosts BlackRock's stock price. The kicker, of course, is that ESG strategies aren't any more expensive to run than their non-traditional counterparts. So, yeah. Man. Oh, and by the way, you're complaining about the wealth gap? Remember, every time you buy ESG funds, you're increasing their wealth. Exactly. Oh, my good. The problem with ESG, while the concept is undoubtedly well-intentioned, is where the money goes, the greed follows. Yep. There probably aren't that many companies in the ESG universe that actually make a positive contribution to society. I suspect the majority of being invested in ESG is to be misallocated. Yep. Here's something else. ETFs are supposed to carry lower fees than regular funds because they mirror a typical basket of stocks like the S&P 500. However, claiming to be an ESG screening methods, Wall Street found a way to inflate its fees. Studies show that management fees on ESG funds are more than 40% higher than other ETFs. BlackRock currently manages about $200 billion in ESG client money, which means that number is likely to grow and add to BlackRock profits, and they're going to buy their own shares. It's such a freaking clown show, man. Laughing all the way to the bank, and we see while these funds cost more, the performance isn't any better than just buying the index. These funds haven't beat any indexes, and that's simply a creed to make money only when they do pack themselves with high-flying tech names. Sounds good on paper until you drill down. That's Michael Leibowitz, CFA. For starters, such investing methods are highly political and veer far to the left. Companies often get good grades supporting such lefty causes as BLM. Oil companies like Exxon will get higher markets for building wind farms that produce energy inefficiently. Here's where Larry Fink and BlackRock come out ahead. They have sensed that with all the media hype around ESG, investing as the next frontier, they can make a lot of money and create a new type of fund, 100%. In short, while Wall Street pushes out products to make you feel like you're socially responsible, they laugh all the way to the bank. Could not agree more. Let's read some comments here because I was kind of stunned to see this guy comment. This was, I said, does Larry Fink own a private plane? I bet he does. All fakers, these guys. If you're going to feign concern about CO2, at least for the love of all that is good, refrain from getting on an airplane. Anyway, so check this guy out. I was surprised by Scott McKillop, whatever his name is, because he compares, he says, let me see. Hold on, let me pause it real quick. My man Scott, he says, your statements and suggestions that ESG portfolios and non-ESG portfolios are essentially the same thing is wrong. Your own examples show that. When you compare the top 10 holdings of ESG and non-ESG, 8 of the 20 stocks listed appear in one list but not the other. That was interesting. It was 40%, man. So 60% of the same stocks. Now, you could say it's active share, but then we go back to the performance. Let's see where it was here. And we got a 97% R square. Yeah, that's That's not different volatility. That's just put it that way. They track each other pretty significantly. So there's a closet index. I mean, this is no different than closet indexing. High fees for closet indexing is what you're doing here. But now you get to couch it on a green you say, well, it's green packaging. It's closet indexing, so they can charge higher fees. Anyway, do what you got to do. I just find it funny. I love the green people. They're all out to make money, man. That's all there is to it. And they're making money off or not, maybe not you, but some people's naivety, whatever, being naive. All right, we'll see you.